You can leave Canada in a weekend, yet your tax bill can't. The day you stop being a Canadian resident, the CRA pretends you sold everything you own and taxes the imaginary profit. It's called the departure tax. If you're dreaming about leaving Canada, the departure tax is the part nobody warns you about. Stay with me. At the end, I'll give you the 2-minute tie check that tells you whether the CRA still thinks you live here. I learned this one the embarrassing way. Massive job offer abroad, packed my bags in a weekend, gone. Clean break. Or so I thought. A year later, a letter found me. Because I'd left my bank accounts open and rented out my condo, Canada still considered me a resident and wanted a cut of everything I'd earned overseas. Tax limbo, certified genius move. So here's the machine. Officially, it's called a deemed disposition. The day you become a non-resident, the CRA treats most of what you own, stocks, funds, even foreign property, as if you sold it all at market price that morning. You didn't sell anything, doesn't matter. If your investments are up, you owe capital gains tax on profits that exist only on paper. The CRA doesn't do goodbyes, it does exit interviews. Now breathe, the big things are off the list. Your RRSP is exempt. Your TFSA is exempt. Canadian real estate is exempt too because the CRA can tax that whenever you actually sell. The departure tax mostly hits regular investment accounts. That's the trap named and half diffused. I read CRA residency pages so you don't have to honest Canadian money math every week. So subscribe if that's useful. Next question, when do you actually stop being a resident? Everyone thinks it's the 183-day rule. Spend fewer than 183 days here and you're free. Nope, 183 days can make you a resident. It never makes you a non-resident. What matters is ties. The CRA sorts ties into two piles. Primary ties, a home available to you in Canada, a spouse here, dependents here, any one of those is heavy. Secondary ties, bank accounts, driver's license, health card, furniture, memberships, light alone, heavy in a pile. My condo and my checking account were enough to keep one legal foot in the snow. And yes, they can even count the gym membership you kept, which is more attention than I ever gave it. But the part that actually changed my plans wasn't the exit bill. It's what happens to the accounts you leave behind. Two of Canada's best deals travel very differently. And don't worry, that tie check is still coming. Your TFSA survives. No Canadian tax, and it keeps growing. But you can't add a single new dollar as a non-resident. And here's the kicker. Your new country probably doesn't care that it's tax-free. Many will tax it like a plain old account. Your RRSP is the better traveler. It stays sheltered and keeps compounding. When you withdraw as a non-resident, the CRA skims a flat withholding tax off the top. The exact cut depends on the tax treaty with your new home country. Pensions? CPP is the loyal one. You paid in, so it follows you to any country on earth for life. The average new retiree's check is about $880 a month, deposited wherever you happen to be. OAS is pickier. The max is about $750 a month. But it only follows you abroad if you've clocked roughly 2 decades of adult residence in Canada. Fall short, and it stops 6 months after you leave the country. Qualify for both, and the average CPP plus the max OAS lands at about $1,630 a month for a single retiree, flowing to a beach chair anywhere on the planet. That's the dream half of this story. Now, the tie check I promised. 3 questions. 1, is there a home in Canada you could walk back into? 2, is your spouse or a dependent still here? 3, How tall is your pile of small ties? Accounts, license, health card. Cut the primary ties, shrink the pile, then file your final return with an actual departure date on it. That date is what triggers the deemed disposition, so run the numbers a year before you fly, not a year after. Verdict: the departure tax isn't a wall, it's a toll booth. Brutal if you hit it blind, manageable if you see it coming. Which tie would be hardest for you to cut? Tell me below. And if you want to see where that pension actually goes furthest, my Retire Abroad breakdown is the next stop. Plan the exit like you planned the arrival. And a quick reminder, I'm a guy with a maple leaf mug, not your accountant. This is education, not financial advice.